You actually pay 0% taxes if you set up a company in Dubai. Now personally, I was really curious to know if this could be done or not. So I literally went out and paid thousands of dollars in tax advice to multiple tax advisors to find out exactly what the rules were. So let me share with you exactly what I learned about this so-called 0% tax. Quick disclaimer, this video isn't financial tax advice. So here's exactly what I learned. Simply put, if you live in the UK or pretty much any tier 1 country around the world, your country's tax office isn't stupid. They've probably set up CFC rules, aka Controlled Foreign Corporation rules, as well as anti-avoidance rules. Now essentially what these rules say is that regardless of what country your company might be registered in, so Dubai or the UAE in this example, if your company is centrally managed from the UK or whatever country you're currently in, then you're liable to pay corporate taxes in that country. So even though it is completely true that you can have a free zone company in Dubai and pay 0% corporate taxes in Dubai, you still need to pay 19% corporate taxes in the UK or corporate taxes in whatever country you're living in, as long as you're managing the company from that country. Now, if you're planning to leave the country, leave the UK and live in Dubai, then obviously you could prove that the company isn't tax liable in the UK because you're not physically running the business from there. And then in that case, you could actually benefit from the 0% corporate taxes. There are some small technicalities to it, but that's basically the concept of how it works. But if you're like me and you don't want to leave your home country for several reasons, then it's likely you won't even benefit from setting up a company in Dubai. Because you're not really benefiting from the so-called 0% taxes if you're going to end up paying 19% in the UK in any case. And don't forget, the setup and maintenance cost of free zone companies in Dubai is multiple thousands of pounds a year. So simply put, every company managed from the UK is treated as a UK company for tax purposes. So regardless if you're a Dubai company, a Bahamas company, a Hong Kong company, you would still be treated as a UK company for tax purposes, which means you still need to pay normal UK tax, you need to file accounts for Companies House, you need to fill in the same paperwork, etc. As long as the company is managed from the UK, like I explained, of course. Now there is one small thing you could do to slightly reduce your taxes, however your options are limited. If you go to the gov.uk website and type in CFC rules, you can find this excluded territories list, which is essentially a list of countries that you can set up a company in that don't have to follow the same tax rules that I just explained. Some of these countries include the USA, most of Europe, and loads of other random countries. Now basically one of the reasons for this excluded territories list is because these countries all have similar corporate tax rates to the UK. So you're not really saving in taxes if you do move to these countries, or at least it's not a big saving. And also it's very likely that if you're setting up, let's say, a US LLC from the UK, it's because you have to for business purposes, for maybe like Amazon FBA or something, so it's not treated as tax avoidance. If you want to see more ecom tips, make sure to follow this account.